Hey guys, it's Nick. It's late Sunday night, and Evergrande is halted in Hong Kong, along with its property management stock as well, but not the EV stock. So, I'm going to talk about what's the latest going on with Evergrande and their new potential default coming up on Monday, and what effect it might have on the Chinese stock market and the US stock market. So let's take a look at how this potential default is different than the ones from last week. So here's an article in Zero Hedge saying the shares in Evergrande and its property management unit were suspended from trading Monday in Hong Kong as traders eyed a fresh debt test for the developer. It says no reason was given for the halts on Monday, and the shares of China Evergrande New Energy Vehicle is still trading in Hong Kong. So these halts most likely have to do with the Evergrande debt that is due on Monday, and it is a dollar denominated note, and it's maturing on October 3rd, issued at an initial amount of 260 million by an entity called Jumbo Fortune Enterprises, and it is guaranteed by Evergrande. And so, since the maturity is Sunday, the effective due date is Monday, but Monday is a holiday in China, so that may delay things a little bit. And the issuer is a joint venture whose owners include Hengda Real Estate, Evergrande's main onshore unit. Now, what's different about the Jumbo Fortune note is that, unlike the other two non payments that Evergrande had, those had a 30-day cure period, so they have 30 days to come up with the money. This is not the same thing. This is a maturity, and so it has no grace period, and non-payment of bond principal would constitute a default. So basically, they have to pay back the principal. These are not interest payments that are due, it's the whole thing. But Bloomberg notes that 5 business days would be allowed if failure to pay is down to administrative and technical error. So, of course, you could say, my secretary sent out the wrong check to the wrong address or something like that, and the check is in the mail or something along those lines. So they have another 5 days, apparently, if all else fails. But more details of the guarantees aren't really known because the note prospectus isn't publicly available and the deal is not listed on exchanges. And so adding to the potential leeway is that Monday is a holiday in China. So this Bloomberg article talks about that, and it says Beijing has stepped up efforts to limit the fallout, signaling it's willing to prop up healthy developers, homeowners, and the real estate market at the expense of global bondholders. Okay, you could have saw that coming, right? So in the last week alone, Chinese authorities have dispatched top financial regulators to nudge the country's massive banks to ease credit for homebuyers and support the property sector. They also bought out part of Evergrande's stake in a struggling bank to limit contagion. And the central bank, meanwhile, pumped up 790 billion won or 123 billion into the financial system over the last 10 days to ease liquidity. And so here they're saying that China will try to ring fence Evergrande while showing little interest in a direct bailout of the developer that has roiled global markets for weeks. That doesn't bode well for bondholders both onshore and abroad. The first obligation is going to make sure that homeowners who bought those homes take delivery and are made whole, said Marathon Asset Management Chief Executive Officer Bruce Richards, who started buying Evergrande debt last week. At the very end of the pecking order are offshore bondholders. So even though Evergrande is really big, it accounts for just 4% of sales in the country, but real estate accounts for 29% of China's economy. And China also faces a potential backlash from the 1.6 million homebuyers who put deposits on Evergrande apartments that have yet to be built. Getting those projects completed will help avert the type of social unrest sparked last month by retail investors demanding payment on some 40 billion won in Evergrande high-yield investment products. And if you haven't seen this video or pictures of what happened at this meeting with this lady with a knife that wants to off herself, it's pretty dramatic. Basically, she's saying she has nothing to lose, and if she doesn't get her money back, just the principal, she doesn't even want the interest. And this is kind of the, I guess, the 7 stages of grief. She's now in the bargaining stage of just give me back what I put in and everything will be okay. Otherwise, I'm going to off myself. Now multiply her by another 1.6 million people or more who have money invested in this thing and in real estate in general, and things could get really ugly. So the Chinese government is more worried about that than they are about some foreign investors complaining about their bonds not being paid. And homeowners already face the threat of declining prices after years of gain. Measures of price growth, housing starts, and sales have moderated significantly in recent months, Moody's notes in a report. So with the slowdown of a housing market, that could be what actually shows who's swimming naked or exposes the Ponzi scheme, so to speak, just like we had during the financial crisis exposed the Ponzi schemes of people like Bernie Madoff. And given the heightened risk of social unrest, Beijing will try to ensure that construction workers are paid first in any restructuring, followed by home buyers, then suppliers and lenders, says James Feng, the founding partner of Poseidon Capital Group, a Chinese fund that specializes in distressed and special situation investments. It's highly likely that Evergrande's offshore bondholders will be wiped out, he said. And this is not the first time China has gone through this. They have plenty of experience managing collapses of conglomerates like Evergrande. H&A Group companies restructuring this year may be a model, according to Citigroup. Following the H&A example, Beijing would likely step in, break up Evergrande's businesses, and sell assets to strategic investors. Under this scenario, bondholders would take a severe haircut, and equity investors would be all but wiped out. So anybody that's looking for a play of Hertz or something like that and trying to buy Evergrande stock at $2 thinking that it's going to play out the same, you may be in for a surprise. So they say regulators will make sure no systemic financial crisis will happen, which is their bottom line. At the same time, they will punish developers that are highly leveraged. And so with Evergrande's main offshore bond trading at 27 cents on the dollar, investors like Marathon have little prospects of being made whole. They're betting instead on some trading gains in the overhaul. So they're buying this stuff at 27 cents on the dollar, hoping for a bounce once they get broken up and sold off to different companies. So he says, we don't know what the recovery value is, but we're getting close to the point where it now makes sense to buy. So that's what's going on with the Evergrande halt and the possible default that's going on today. Will this be a Lehman Brothers type thing that has contagion and brings down the whole market and stuff like that? I doubt it, even in China. But for the US, I don't think we're going to have that kind of contagion just from Evergrande. Now, if there's a whole bunch of other cockroaches and US banks are involved somehow or whatever, of course, you'll find Goldman Sachs in there somewhere or whatever. But as it stands now, I don't think it is going to be a huge deal in China and definitely not a huge deal in the US stock markets. However, what happens with Evergrande and the foreign bondholders and how they're treated might add more fuel to the fire of people getting out of Chinese stocks, meaning Americans or other foreigners buying Chinese stocks, and they're, not wanting to get into them now because of the uncertainty and thinking that China doesn't really care about them and will change the rules on them like they've been doing with Alibaba and Tencent and these guys. So there's a lot of people that are still worried about that, and that could even lead to more worry if this Evergrande situation seems to favor Chinese investors and not foreign investors that are holding these dollar-denominated bonds. So in my mind, I think about how it's going to affect the big blue chip Chinese stocks like Alibaba, Tencent, and Baidu. These stocks have been getting hit like crazy. Alibaba is what, from $315, now it's $140, and it just keeps going lower and lower. Every time it looks like it's ready for a bounce, it goes down another $3-4. So these things are really taking a hit, And who knows where they're going to bottom. I think they're going to bounce eventually someplace, maybe once the evergreen situation clears up. And if they do bounce, they'll probably bounce pretty hard for a short time. But in the long term, there's still that doubt of investing in Chinese stocks because they don't know what the Chinese government is going to do. So if you like this video, hit the thumbs up and I'll see you in the next one. Thanks for watching, guys.